So, like I said yesterday, so at this point, to compare these two, these two are were fundamentally different kinds of trades. So, like I said yesterday, when this bar was happening, so this was a bar when we took the trade. So, uh, when this was happening, uh, the Fisher was already at the bullish point. It has adjusted right now, so we cannot see it like that. But if we have screenshots from then, you can see that the Fisher was already bullish, and mm, and we wanted to capture that, not to miss out on this kind of a move. And why I said the risk was minimal, because the price was already at this support right here. So it was unlikely that it was going to cost us more on the losing side. But if it got confirmed, it could rally back from then. So this should not happen. This move would not happen. We'll just have the continuation of this trend. So that's the second kind of trade. We have two kinds of trades on the current strategy. One is the this breakout, plain breakout trade. This is obviously not a trade because the Fisher is against us. This is the trade. For this was the trade for us. uh, and if the breakout didn't happen, we didn't want to miss. So while we were talking, it was above this, and I said that because the low risk was low, you might as well take it. And I remember there was like 43 minutes remaining till the bar close. So if we waited till the bar close, we obviously would not have taken the trade. So that was the decision I think you made. And we made that because the risk was relatively lower, because the price was already at this, and probably we probably could have closed it in some profit even if we just waited a few minutes, because after a few minutes of the after it closed, it went up to 42 690, 42 700 area. So that's what I meant. Yeah, that the risk was very low, and that was exactly what happened. But this is now, this current trade has no comparison to this at all, because this is a separate kind of trade. So uh, it's a separate kind of trade, this is a separate kind of trade, so comparing them doesn't really have to doesn't really need to be done actually. So isn't necessary at all. This is a simple breakout trade. Like I said, uh, this I talked about this on the morning brief as well. Uh, we enter at let's say even at the bar close of this one, which was at 42,795, and it went to it went to 44,325. So that's 1,000. 500 points, 1,005, $1,550 of upside, uh, which is almost 4%, close to 4%. So that's a pretty good trade on like 12-hour time frame. So this is about 12 hours. It didn't catch on till the US session was nearing. So early in the morning, US morning, it boomed, and then it's seeming like it's continuing, and it's going to test that 44,500 before it makes any uh, like directional move on either direction. So it can actually get resisted, like we talked about, but yeah, it can continue if it breaks that resistance in one swing. So getting resisted, coming back down, and then testing again is going to be harder. It needs to make the full swing, and breakout on this momentum it has right now. But I think, yeah, it's slowing down also in the last 30-35 minutes. It's slowing down, so let's see what happens. Uh, and since 6:30, 3 hours, 2-3 hours back, it has not moved that much ups on the upside also, which is concerning as well. So if this was a trade, I would probably take as much as I could get, and get out near near the highs, 14,400, 44,400, or 44,300. And if that follow through breakout happens, it happens, we may try to take it again. But yeah, I don't think keeping it for long is wise. Even though it's a strategy, if we are making strategic trades, we should keep it open, even if the loss is realized. We don't need to make like discretionary decisions. If we don't want to, we can just keep it, and we'll still make profits, good profits. It doesn't matter in any way. So I think that's about it about these two trades. Like I said, these are two different kinds of trades. We can also look at it here. This is an example of the kind of trade I wanted to make yesterday. I wanted to suggest yesterday. So at this point, so at this breakdown, this is obviously not a trade, because the fisher is against us. As you can see, the fisher is against us. But at this point, it's a trade because the fisher has turned. So that's the support confirmation. Just think about it. It went outside for a while, and then got came back and went on a crazy downside. So that's the kind of move I was expecting this to make. In any case, yeah, it didn't happen, and because the risk was low, I think it was a fair. It was a fair trade to make. Thank you. I hope it helps. Yeah.